Good morning, everybody. It is Friday, February 21st. Were you ready for the contained day yesterday to the downside? We laid out why that was a possibility, and we'll dive into some of that this morning, as well as give you an overview of how positioning is shaping up. First, just a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. So if we look at what happened yesterday, we knew that our systematics were a large buyer. And again, we've mentioned that if we can monitor this, then the commercial side of the market is as well. And this is when we mentioned yesterday about like a Black Friday example that if you knew that 50 times your normal amount of customers were going to be coming in, you could sell a lot more. And that's what we saw was a big sell coming in yesterday. But again, we couldn't break that $4 billion bid. And that was critical in telling us a lot about the market, that this was a selling opportunity for the commercial side, but they waited until this day came to make that big push lower. They've been holding the market up since. Now, we still haven't broken our lines in the sand. Our upper line in the sand today is at 61.19, and our lower is right at that 60.98, which is our lower edge today. Our systematics now have gone away. And if we look at how they're positioning over the next 5 days, they are 91% invested, so we are starting to run out of capital in the market. And next Wednesday is the only day that we see any kind of support bid coming in. So that is also a key catalyst day. We have NVIDIA earnings after the bell. So that is going to be one we really want to pay attention to. But otherwise, this group is not going to be a distribution opportunity for the commercial side of the market. And that's a big telling sign that we could see a move outside of our range. And yesterday, if you understand how these flows work and how the market positions itself, as our educators and a few of our subscribers and students did as well, get long against low of the day and hold for the whole day because there were very high odds we were not going to break that. And so we had several get long at 61.08 with a 5 to 6 point stop into the move up to the end of the day, back up to that 61.40. So if you're not capturing at least 3 or 4 hour trades, then it's time to check your system and focus on what is actually moving the markets so that you can really enhance your edge and understand the probability of distributions that come in the market. Now, on an overall scale, our fund managers again are chasing performance and have gone from a 70% investment point at back here at the beginning of the month to almost fully invested with about 92% of capital. So just like our systematics, they are buying this move up and eventually will get shaken out again on the downside as we see play out again and again. With the calendar and with different business cycles and their turning points, we're not looking for that in the most near term, but in a 1 to 2 week time frame. We're going to look for a shakeout as long as those fund managers continue to buy, because once they run out of capital to purchase on, we run out of a buyer in the market and we start that washing machine. And this played out perfectly a few weeks back when we looked at our model and we had our fund managers again around that 90 to 95% invested. That was the week before FOMC in December. And that happened so we get this information, we run these models, and the week before FOMC, so that December 18th week, we were 99.24% invested, so we were running out of capital. And again, it was a repricing event, but this also leads to that kind of shakeout. Now we had the same thing play out in November as well, and we had a small shakeout to start the beginning of December. So those are the kind of things that we'll look at in the coming weeks ahead. And for our students, we will provide that information daily as well as the odds of distribution. For our subscribers, we'll put out the levels, and if you have questions, we can answer those as well. And if you are ready to level up your game and ready to take your trading to a new level and get out of that valley of despair, then check out our courses that are upcoming in the next couple of weeks starting in March. You can check out our website for our course offerings and our Discord offerings. And be sure to control your risk today, guys. It is OPEX. There will be a lot of repositioning in the market. And next week, we will see that unpin and the market begin to free flow a little bit more. Have a great day, everybody.